now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger.
Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking extensively about the current state of Bitcoin and why I think that it needs to go through a major rally relatively soon, or we could very soon be witnessing a drop down to a critical level of support around $22,808. My name is Jeb. Welcome to the Coffee and Crypto live stream. We're in studio today, and I'm very excited to bring you today's episode because a breakout on Bitcoin, I believe, is coming relatively soon. I don't know what in the world these headphones did to my hair. My hair was looking much better. There we go. Sometimes when you put headphones on, they completely jack up your hair. Sorry about that. All right, looking like a bit of a peacock there. Let's go ahead and read some chat. Appreciate everybody for tuning in. We got Ernest Stokes in chat, who was first said, yo. What's up, Ernest? Sean O'Brien said, happy Friday. Friday indeed. Crypto Mini Bikes in chat said, good morning, everyone. Joe Bollier's in chat said, good morning, Jeb. Mike Lowry said, happy hashtag FinSoft Friday. Alex Nibo in chat. OC Pet Doctor here said, good morning. Crypto Surge said, good morning, happy Friday, everyone. Philly Scales 1428 said, morning, Jeb. We made it through the week. That's right, we sure did. Alex Nibo said, mic is off. Oh, goodness. Aha. Un momento. Aha.
I was using the wrong microphone. Let's see. Check, check. Much better. I'm sorry, that probably sounded horrible. Gosh, that was pulling audio from the camera. Ugh. I don't have a microphone on the camera because I got a microphone right here. Ugh. Sometimes a setting will just be off and it'll throw you off. Sorry about that, guys. Sounds like you're in the bathroom. It's Remy No Limit. Well, we got everybody to start chatting, so now I know who was here creeping. Now I know who is here stalking and not actually chatting. I see you, Monero Dinero. Let's see. I see you, Ali and Crypto Cousins. Thank you guys for tuning in. Micah Man, love the name. Good morning. Hope all is well with you and your family. Doing well. Doing well. Do apologize for the audio there, guys. Mike Lowry's in chat. If you guys don't, you sound like a hollow. You have a hollow sound going. If you guys didn't see my Twitter, I want to go ahead and direct you on over to my Twitter. You can find it with the link in the description. What am I installing? What was this? What is this? I don't know. What was all this packaging? Someone astutely pointed out that I was in a handicap parking spot. You were right. The people that own the building did not mind. And there's like 17,000 other parking spaces that were actually closer to the front of the building. So no mind. This all got thrown away. But what was I installing? What was I installing? I don't know. What was I installing? I'd love for you guys to kind of guess what it was. Let's see. And what is this? What is this? Question mark. What's this? I don't know. Somebody responded to this and they said 16. So good job. Good job to whoever said 16. Vin, well done. Well done. You are correct. 4 times 4 is 16. But what is this? I don't know. Oh, look, there's some packaging over there. I don't know. Maybe you guys could put 2 and 2 together. Treehouse office. Mike Lowry said that was me. No way. Jeb is at the studio, Johnny John. I am in studio right now. If you guys don't know, we are, I'll say this, and then we're going to jump into the content. We did decide to cooperate with a criminal trial against an individual who I will not give you any allusions to who it is. I can tell you who it's not, but it's not somebody that any of you guys would know, who is very violent. And so for safety, we are being pretty careful about where we are right now. So there we go. Home defense turbo laser. Okay, the thing that I'm teasing is pretty freaking cool. It's not that cool, though. A home defense turbo laser. That takes the cake. All right, let's go ahead and jump on over to CoinMarketCap. Bitcoin has been trading sideways, more or less, over the last hour or so. Over the last 24 hours, we have seen a slight bounce. Last 7 days, we've seen a slight bounce as well. But the thing I want to talk about today is the fact that Bitcoin is attempting to hold at a very important level of support. And if it doesn't hold here, we're probably going down to this level here, $22,808. And part of the reason I want to share this with you is because I think there's a shorting opportunity if Bitcoin fails to hold this support. And if Bitcoin does hold this support and bounces and rallies through the close by resistance, then there's a longing opportunity. Of course, you guys know I like to help you trade and be informed on the cryptocurrency markets at large. And so that's what we're going to do today. We're going to look at the market through the lens of being informed about the market, and then also with the net goal of trying to come up with some kind of entry that we can utilize in our trading or our investing. Maybe you're looking for a place to load up some bags and hold on to them for the next bull market. Maybe you're looking to make a swing trade. Whatever it is, you're going to walk away from this stream much more prepared for either one of those activities. And even if you're not a trader or an investor and you're just here for entertainment, we're going to keep it fun. All right, let's jump into it. Bitcoin has obviously been in a major downtrend ever since it hit yearly high on July 13th and 14th, around $31,500. Bitcoin hit that high after the XRP case was settled in favor of Ripple, and the SEC was essentially humiliated just 1 month to the day after they launched their attacks on Binance, Changpeng Zhao, and Coinbase, respectively. The SEC was then again humiliated when they lost the case against Grayscale here in the very late part of August, Tuesday, August the 29th, to be specific. Both of those cases did not send Bitcoin into major rallies. You can see that Bitcoin went through a one-day jump, a one-day price hike on both of those occasions, but it was not able to move into a sustained new rally. In fact, we have not seen sustained new growth in the market until relatively recently. Right here, we saw one green candlestick in both of these cases, but otherwise we've basically been in a predominant downtrend. Even over here, we were more or less just trading sideways, fell through the 20 daily exponential moving average, and we've been in a downtrend ever since. Something I want to point out is that 20 EMA. This 20 EMA is so freaking pivotal in this market, and I've been using it for over half a decade. For any of you guys that were in CT2A, you'll remember that I called it my favorite technical indicator in the entire market. That was before I found LuxAlgo. LuxAlgo, unfortunately for the 20 EMA, took the spot, but the 20 EMA is probably still my second favorite indicator. It is the single most powerful free trend indicator that you will ever get. Again, the likes of LuxAlgo giving you like 500 different indicators in here. I mean, there's so much in just the one LuxAlgo original indicator, and there's also like 10 more that come with it. But as far as free indicators go, as far as one indicator goes, this is absolutely a very powerful trending indicator. And it's very simple. It's because it tells you when the market's in an uptrend or when it's in a downtrend. And if you're trading straight through it, that means you're trading sideways, and then you got to wait until you break out of that range. In this downtrend, we had been below the 20 EMA for quite some time. When we were in this uptrend, we were above the 20 EMA the entire time. When we were looking at the 2020 and 2021 bull market, we were above the 20 EMA most of the time. And when we finally actually started capitulating below the 20 EMA properly, that's when we went into the downtrend in the middle part of 2021, summer of 2021. From there, Bitcoin more or less always follows this pattern. And so the thing that I want to mention to you today about the 20 EMA is the way that this market and this market are correlated. Notice Bitcoin was firmly above the 20 EMA right up until this point. And then it dipped below the 20 EMA here for a little bit of time. And then it came up and started rejecting from it from resistance. And that's when that downtrend really began. It began right when Bitcoin fell below the 20 exponential moving average. And then after it fell below the 20 exponential moving average, it began using the 20 exponential moving average as resistance. Well, now we're seeing the exact opposite thing happen on Bitcoin. And that is that Bitcoin is no longer rallying up to the 20 EMA using it as resistance. Instead, Bitcoin managed to briefly break above the 20 EMA back on Thursday of last week, a little over a week ago. These three white soldiers, 1, 2, 3, 1, 1, 2, 2, 3. These three white soldiers right here gave us the indication that Bitcoin was moving into a new predominant uptrend. Those three white soldiers managed to break above the 20 EMA, and we started opening and closing candlesticks up here. We saw a spinning top, which indicated indecision, which meant we could have very easily moved to the downside, but instead we actually moved to the upside, again indicating bullishness. And now we're seeing something very significant happen over the last 24 hours. Bitcoin has come back down and is testing the 20 exponential moving average as support when it had a lot of runway to run into the 20 exponential moving average. You know, one of the things about the way I title these streams is a lot of times I try and title them in a sensationalist way that I disagree with, because I want to not bait, but I want to get people in that are either too scared or too excited, and I want to share with them what I view to be the objective reality about what's going on in the market. And then when you see that objective reality, then you can start to say, okay, maybe I'm being a little bit too excited. Maybe I should pump the brakes a little bit. Maybe I'm not being too excited. Maybe this is exactly where we should be. Maybe I'm being too scared, and maybe I need to be a little bit more bold, a little bit more confident. Whatever it is, I want to bring you in if you think one thing about the market and I disagree with you, because I want you to be able to hear an opposing opinion, not because I'm certain that I'm right. It's very possible that I'm wrong or missing something, but I want to make sure you're getting a side of the story that you haven't heard yet. So is Bitcoin going to crash to 22,808? Absolutely it could, but I also want you to know that I'm quite encouraged by the fact that Bitcoin is coming back down to this 20 exponential moving average and holding, in the same way that when Bitcoin fell down here and then had a large rally up to 20 EMA, large rally up to 20 EMA, large rally up to 20 EMA, and we rejected all three times, once, twice, thrice. That gave us confidence. Okay, yeah, Bitcoin's in a confident downtrend. We now have to treat this as a confident downtrend. We can't just look at this market through the lens of, oh, everything's hunky-dory. No, this is a confirmed downtrend at this point. Right now, when we're coming back and backtesting the 20 EMA once, twice, this is actually the third time. This is a much larger pullback. We are now confirming that we're in an uptrend. So that's what I want to bring to your attention today. That is the most important part of what we're going to be talking about today, but we're also going to look at the fullness of that, what that implicates. So there's a few other levels that Bitcoin is holding on right now. So for example, down here on the hourly chart, we can see that there is a strong level of support right about here. It's about 26,250 to 26,350. You can draw just about wherever you want, but it's somewhere right in here. It's really more of a zone, actually, so we'll draw it as a zone because you can find that level at a couple of different places. It is nice to go ahead and draw that as a zone of support, probably about right here. You can see this zone of support essentially moves up to this top here on the Thursday, September the 7th. Again, we're on the hourly chart. Moves down to these local highs back here in the later part of August. This zone is what Bitcoin is holding on right now. We managed to rally up here. And unless Bitcoin goes through a small little bull trap and then has a right shoulder and we move into a head and shoulders pattern that could drive us all the way down to 25,000, unless Bitcoin goes through that kind of formation, Bitcoin's actually looking pretty solid right now. If it's able to hold above this support, then that's where we can start looking for a higher high above the local high that we set last Thursday, or excuse me, not last Thursday, this Thursday. Tuesday, not Thursday, just a few days ago, and then we could begin a major uptrend. So now we have to ask ourselves the question, is that going to happen? Is Bitcoin going to hold the 20 EMA? Is Bitcoin going to be able to, and this is really the critical question, is Bitcoin going to be able to maintain the confidence of the bulls for long enough that enough bulls join the cause and Bitcoin continues uptrending? The 20 EMA is basically flat right now. Bitcoin has not moved so far above it that it's going to enter into this giant uptrend that is almost impossible to stay above. It's pretty much trading sideways right now on top of this support and also on top of the other third major level of support Bitcoin has right now, which is the green trend catcher on Lux Algo. This is a huge deal, by the way. If we get a buy signal, that is a confirmed buy signal from Lux Algo. Confirmed buy signals on average profit us between 20 and 50%. You heard that right, between 20 and 50%. That's on no margin. So we're talking somewhere between like return to local high to significantly higher than that if we see that confirmed buy signal. I mean, just to give you an example, this was the last confirmed buy signal and it rallied us 18.46%, and that was a below average rally. Bitcoin's above a lot of support right now. That's the point. The other point I want to make is that just because above support doesn't just mean it's bullish. The other thing that's bullish about this, and this is what I was kind of getting at with the 20 EMA trading sideways, that zone of support obviously being sideways, not trending zone of support, is just a flat zone of support. And also trend catcher being right there around 26.4. That means that Bitcoin just has to trade sideways. All Bitcoin has to do is sit above the 20 EMA, sit in green trend catcher, sit above this zone of support. There's three levels and zones for just like a week or so. And that will build confidence in the bulls that, okay, no longer should we be shorting. Instead, we should be longing. That is going to be enough time that you're going to start to see people in shorts start liquidating those positions. I'm not talking about getting liquidated. I'm saying they're going to liquidate those positions, as in they're going to cut their losses and get out of the position. If they haven't entered it, then they'll stop entering it. And you start to see the sentiment shift bullish. Every day that Bitcoin does nothing, but the area that is doing nothing is in bullish territory, is a day that the bulls are gaining more strength. It's a day that the bulls are getting stronger because think about it like this. Think about it like a war of attrition. I like to conflate the idea of the bulls and the bears as in like two sides of a war. If nothing happens on the battlefield, but one nation, all being equal, except for this one thing, one nation is building 100 tanks a day and training 10,000 troops a day, and the other nation is only building 50 tanks a day and training 50,000 troops a day. I think I said 100,000. I said 100,000. I said 10,000 and 5,000 troops a day, whatever it is. Then eventually the nation that is building more and recruiting more, again, all things being equal, which is never the way it works, but all things being equal, the nation that's building more is going to be stronger. It's that simple, even if there's no conflict on the battlefield, because there is an outpacing going on. And this really happened in the Second World War. That's what happened with the Allies. The United States was over here on our little island over in the New World, and nobody could touch us other than, there was Pearl Harbor. But other than that, we basically had no attacks. There were a few spies. Every single one of them either committed suicide or got captured from the Germans. Even in Britain, there were some Germans in a U-boat that landed somewhere like lower in New Jersey, I think. Like 10 of them. They all got captured. We were impervious to attack, and we just sat here and built out a giant industrial economy and won a war of attrition because we outproduced the Germans. The Germans were getting their factories bombed, and we were completely immune to all of that warfare here on our own continent. It's a little bit kind of like what I'm talking about with Bitcoin. So long as we trade sideways and there's no fighting going on, then whatever faction is gaining strength, time is on their side. Time was on the side of the Allies. It was not on the side of the Germans. Thank God. They were horrible, right? As far as I'm not saying the German people are horrible, but obviously what happened in that war was terrible. I think we can all agree on that. So that's kind of where we're seeing Bitcoin right now. If we see the market trading sideways, again, it's an analogy. I don't mean to say the bulls are, Germans and the bears are America. I'm not saying that. What I am saying is that when we trade sideways and one faction is growing faster than the other, then time is on their side. Right now, time is on the side of the bulls. As we trade sideways, time is on their side because we're sitting above the 20 EMA. If we were sitting below the 20 EMA, as we were doing back here, time was on the side of the bears. And you can see the result of that. Let's see. A good example. Let's find a good example here. Time was on the side of the bears right here because we were constantly below the 20 EMA. See that? Then time was on the side of the bulls because we were constantly above the 20 EMA. The fact that we're above the 20 EMA is great. So trading sideways is actually bullish right now. Keep that in mind. That's a piece of technical analysis advice that you're probably not going to hear very often. Trading sideways oftentimes is bullish or bearish. You're probably like, wait, Jeb, what? Yes, you heard that right. Oftentimes, sideways movement is bullish or bearish. You have to use the analysis to figure out which one. One of the other things I will mention here is that Bitcoin has obviously gone through a small correction. So you could make the argument that, oh, yes, Jeb, but this is bearish because it's a bear flag. You're right. It is a bear flag. Astute observation. If Bitcoin follows through on this bear flag, we're going to drop down to $26,000. We're still pretty close to that zone, and the bulls will probably still buy that up. So I'm not too worried about that bear flag. So what are the two scenarios here? If Bitcoin drops below the 20 EMA, this zone of support, and the trend catcher on Lux Algo, then we've got a lot of support to hold us as well. If we look at our VRVP, that's a visible range volume profile based on the last 6 months of price action. We can see the point of control is sitting right here at 25.9. The point of control is the area that you've seen the most volumetric trading. There's a ton of trading that has taken place in both of these regions that's built up a massive level of VRVP support. Now, there's a lot of resistance as well, don't get me wrong, but there's a huge amount of support right here too. If Bitcoin is able to hold above about $25,000, it's going to have all of this volumetric support from the VRVP coming into play to maintain that steady price action. Another example of why trading sideways is actually a bullish thing. The longer we sit up here, the more support we build. So if Bitcoin falls here through 26,400, somewhere in that range, 26,250, let's say. If Bitcoin falls below 26,250, then it's also got support right here at 25,956 or so, right there based on the VRVP. At the same time, the other thing I want to bring to your attention are the MAs. As you guys know, now hang on, I'm going to have to reload TradingView. Sometimes TradingView messes up and you're not able to open your technical indicators. Let's see here. I need to open them so I can analyze them. Not analyze them, manipulate them, change them. Let's see. Coming back to Bitcoin, there's my other fancy chart. Here's one of my fancy charts. All right. Turn that on. We'll go 50 and 100, 200, 400. And then we'll just turn on the 50 and the 200. Many of you guys are very interested about the 50 and the 200, so let's look at that. As you can see, we have a couple of moving averages here. We have the 50 moving average sitting up here that has predominantly been above the 200. You can see that right here. Again, as I said, this does not want to open again. Again, TradingView is a wonderful platform, but sometimes it does give you some glitches with trying to open and close indicators. Go to BLX, open, there we go. Make sure the 50, you can see the 50, sorry, it reset it. Man, TradingView, goodness gracious. Sorry, guys. Give me some trouble here, not wanting to save things. All right, so 50 and 200 are turned on now. You can see there are these colors right here, respectively. Turn that on, and you can see there is technically a bearish cross confirming right now. And this is part of the bearish argument that I do want to mention. The 50 is coming down to the 200, and Bitcoin has rejected from the 50 and the 200. The Bitcoin's also rejected from the 50 right here. And we have also seen Bitcoin come down and hold above the 200 many times, whereas in this case, we've not really done that. The question now becomes, is that a super bearish factor? Well, let's look at the historical picture on that. I'll go ahead and draw a vertical line at the previous bearish crosses that we have seen from these two moving averages, because this is obviously very significant. There's no doubt. These are the previous bearish crosses that we have witnessed between the 50 and the 200, and I've spoken on the 50 and the 200 for over half a decade here on the channel, explaining those two indicators. So these are all of the times that we have seen the 50 and the 200 cross bearish. You can see there's not many of them. It happens only about once a year, and it also normally happens in groupings. The thing I want you to realize is that the 50 and the 200 cross bearish at the beginning and the end of bull markets. You can see here it happened at the beginning of a bear market, happened at the beginning of a bear market, then also happened at the beginning of a bull market. So what gives? That's kind of hard to read. What does that tell us? Well, what it tells us is, frankly, that the market is quite bearish. It just means that Bitcoin has gone down a lot. Doesn't mean we're going to go into a bear market. Well, if a bear market is going down a lot, then yes, that's what that means. But it also happens here in the middle of the bull market, because Bitcoin had, you guessed it, gone down a lot. I mean, it's not a fancy calculus. When I say gone down a lot, I'm literally sitting here trying to think of a fancier way to say it. That's all it means. It just means it's gone down a lot. It's that simple. When the market goes down a lot, that does not mean that Bitcoin's necessarily going into a bear market. We saw Bitcoin go down quite substantially. Both of these cases, a giant bull market ensued. Just because we're seeing the 50 cross below the 200, which we're likely going to at this point, does not mean that the bull market is over. It could bring short-term bearishness because it is a quite FUD-heavy event. Whenever the 50 crosses the 200, whenever the 50 crosses below the 200 or crosses above the 200, those are quite substantial events for the sentiment. And so I should expect, and you should expect, to see some headwinds over the course of the next few days to weeks as a result of this. What I will say, though, is that if they do cross bearish and Bitcoin does hold at these support levels, it's not going to cross that bearish. There are plenty of times where two moving averages will come in contact, but they barely actually cross. If Bitcoin manages to go through even somewhat of a rally here, even if it manages to break bullish above this downtrend, then it will rally enough, and the 50 is responsive enough, because remember, the 50 moving average on the daily chart is not even 2 months worth of price action averages. The 50 on the daily chart will be able to curve back to the upside very easily, so long as Bitcoin within 50 days of this day right here is able to start climbing up above like 27 or so. Now remember, it's a 50 moving average, so if we get out to here, October the 6th or so, and Bitcoin is still sitting down here around 26, then you're going to see the 50 drop off a metaphorical cliff because it's a simple moving average, and it's going to lose all this data. These days back here are holding the numbers up, similarly to how the same thing was happening on gasoline. If you remember, the gasoline prices were up here, and now they're kind of doing this. Obviously, the gasoline prices had some of this data, so the CPI was was more bullish because it was a larger drop going from here. But when it inverts and it goes like that, then that's where it becomes more inflationary rather than de-inflationary. Same point here. It's a 50 moving average. So if we go through the beginning week of October and we're still down, even if we're sitting right here around 26, then it will only be averaging out this data right here instead of this data right here. And then, of course, the moving average will drop, and that will cause that bearish cross. Hopefully that made sense. So 50 moving average takes in 50 candlesticks of data. Right now, this drop happened 37 candlesticks ago, which means that we're factoring in price action data all the way up at 29,000, which is impacting the moving average. When we see Bitcoin trade sideways, if it continues trading sideways for the next 2 weeks or so, that will cause that moving average to drop faster than the 200 because the 200 is not as responsive, and you will see that bearish cross, and it will be pretty confirmed. But in the next week or so, if Bitcoin is able to go through some kind of rally, doesn't have to be much, but just something, then that's where you can start seeing that 50 moving average move up. 200 will move up just a little bit slower, so you could start to see that reversal. This is looking like a cross, but it's not confirmed as just a catastrophic cross just yet, with the 200 doing this and the 50 doing that. It's more of just kind of a kissing right now. They're just kind of marrying themselves together and trading together, because Bitcoin is doing pretty much the same thing over the last 50 days that's done over the last 200 days. Trade sideways. The last 200 days, I've seen quite a lot of sideways action, as you can see right here. Right at the same levels. So Bitcoin's pretty much doing the same thing over the last 50 days it has over the last 200 days. So is this a super bearish event? Not so much. This is, again, essentially another example of proof that Bitcoin is trading sideways. It's trading sideways on a very long term. But if you look at the longer term trend and you ask yourself the question, well, what does it mean that Bitcoin's been trading sideways for 200 days? You'll notice that what it means is that we're in a gigantic bull flag. Support right there. Resistance right there. Uptrend through the middle point about right there. If you remember to what I said just a minute ago, sideways trading is pretty much always bullish or bearish. It's most of the time not actually neutral. So the fact that we're trading sideways, so long as we manage to hold above about 25,000, maintain this support level right here, this is actually still in the long run a bullish formation. Because while we're looking at a bearish cross on the daily chart, on the 3-daily chart, if we're able to rally back to the upside, we will be putting into play a 5200 golden cross, not a death cross, a golden cross. This is the cross that I'm looking at much more seriously. Because if you look at the golden crosses here, they actually have quite a lot of predictive power. Looking back on the history of Bitcoin, let's just go ahead and show you all of the 3-daily chart golden crosses. If you'll remember, I've spoken for the last several years that daily chart golden and death crosses are not as important as you think they are. They are overplayed by the media because they are sensational. If you look at the golden crosses on the 3-daily chart, there's only 2 in history that have occurred. And both of them kicked off the last bull markets, the last 2 bull markets. This golden cross on the 3-daily chart happened around Christmas 2015. Bitcoin would rally 4,300%. This golden cross happened here around May of 19. Bitcoin would rally 783%. And of course, we went through a correction first, but it happened. Those are the only 2 examples of this cross in history other than the one we saw a month ago. Now, of course, it was just a very brief cross, and we fell straight through the floor right when it occurred. But Bitcoin does not need to move up very far for us to see that 3-daily chart golden cross. If we see that, well, guess what? The halving's in 6 months. Guess when these took place? 6 months to a year before the halving. Halving took place May 2020. That was about a year before the halving. The halving took place in, goodness, I'm going to have to check my numbers. 2016 halving date. I want to say it was June? Sorry, July 9th. That's it. I knew that. So July 9th, which is right about here. It's July 5th. Let's move to July 8th, just so it's a little bit more accurate. That's close enough. See, the golden cross happened, in this case, about 200 days before the halving. These golden crosses happened right before the halving. Golden cross, a real golden cross, will probably happen right around here. Halving's going to take place right around here. It's about 6 months apart, a little less. We're looking good for a bull market, guys. You've got to look at the longer-term perspective to get a proper view of what's going on, because it's very easy for sensationalism to freak you out, scare you out of your position when you shouldn't be. When you are making a trade, when you are making an investment, there are a few things that I want you to do no matter what. Let me start with something that you need to remember, and then I will tell you something that you need to do. I'm going to preach at you a little bit here, but hopefully you'll appreciate it because it's very important. The first thing that you need to do is you need to look at the market in such a way as this. When you are buying a stock, when you are buying a cryptocurrency, when you are buying a house, when you are making a business transaction, when you are moving money, you need to treat it as a business transaction. You need to look and see, am I getting a good deal? Do I have a plan? Can I afford this? This is a significant amount of money. I don't care if it's a $5 trade or if it's a $10,000 trade. If you are making a purchase and using your hard-earned money, let's just remember something. Money is a finite resource. It is a product of time invested. So really, money is just another form of your time. When you are spending money, you need to think in the back of your mind, am I willing to spend a portion of my life on this thing that I'm buying? In 2 ways. Number one, you've got to earn the money to buy the thing. And number 2, you've got to spend time to manage the thing. So when you're making a trade or an investment, You need to keep in mind that fact that money is an extrapolation of your time, and your time is limited. You only get so much of it on Earth. You can get a little bit more of it by being healthy, but at the same time, you are not going to be able to get more of it every day. You got 24 hours in a day just like everybody else. So do you want to spend your time and your money on this investment or this trade when you're trying to take a trade? That should help you to understand the seriousness that you should apply to the next portion of what I'm about to talk about. And that is the planning. When you're making a trade or an investment or a purchase, you should have a plan for it. It's very important. And this is something that I've failed at before. This is something that you failed at before. This is something we've all failed at before. There's no condemnation. It's not my point. But I am saying that if you are making a purchase or a trade or an investment, you need to have a plan for it. And then you should follow that plan to the best of your ability. There are times to change the plan, but for the most part, you want to follow the plan because you want to be right in the planning, not just in the execution. Let me say that again. You want to be right in the planning, not just in the execution. Let the execution follow the plan as much as you can. You don't have to be rigid to the plan. Sometimes things change, and you want to get out of a trade or investment early. But for the most part, try and stick to the plan. Make a good plan, stick to it. So view trades and investments as business transactions that you need to take seriously because they do represent a sliver of your life that you'll never get back. And also, make sure that you have a plan going into them. That's why I give you so much information about Bitcoin and cryptocurrency and the current market as it is, because I want you to be able to make those informed decisions. And so with that, then we come to making an informed decision on what we should do about Bitcoin with these facts in mind. All of the support that Bitcoin sees, the death cross showing up on the daily chart, the golden cross potential showing up on the 3 daily chart, the longer term bullish factors such as MACD and RSI. And so how do we prepare for that? Well, let's go ahead and talk about that. Queen said, no plan, planning to fail. That's right. LBB said a plan is important. That's right. DJ Crypto Nouvelles said, miss y'all, brother. Nice to see you back. I'm here and I ain't going anywhere. Good to see you guys. I love, love, love what I'm doing so much. I love being on crypto YouTube. I've been doing this for be close to 6 years here pretty soon. Was it 6 years? 2017, 2023? Yeah, it'll be the company is actually over 4 years old now. The channel will be turning 6 years old soon. Crazy. Absolutely crazy. Okay. Autumn begins tomorrow. It does, doesn't it? I love it. I love it. Okay, let's read chat here for just a minute, and then we'll wrap it out with our putting a cherry on top of what we need to do next. By the way, if you're enjoying today's stream, do me a favor, hit that like button, subscribe to the channel if you have not already. Really appreciate all of you guys for tuning in. Jeb, what's your favorite beer? Haven't had any alcohol in quite a while. What would be my favorite beer? I haven't had much beer. Gosh, it's been so long. When was the last time I had anything alcoholic? It was probably Thanksgiving of last year. No, I had a drink sometime. I don't remember. Man, what am I trying to say? There's a, man. Probably Blue Moon. Is it Blue Moon? Is that what I'm trying to say? No, not Blue Moon. I'm sorry. It is Blue Moon. Yeah, I've had, I think I like that. I think that was the last beer I had. You know, I am definitely not a connoisseur of beer. I'm going to be totally honest with you. A mentor of mine mentioned that one time, so I thought I'd try it. I had it on a date one time with my wife, and I thought it was pretty good. I don't know. I could be wrong. It's been so long. I don't even remember what it tastes like. I just remember liking it. So, like I said, before that, it'd probably been 2 years since I'd had any beer. I drank a glass of wine every once in a while. But yeah. Good deal. All right. Congrats, Jeb. I don't know what congrats is for, but thank you so much. Blue Moon is the one with the orange. That's right. Yeah. Isn't this like the longest bear season we've had? Great question, Crypto Surge. Let's use that to kind of get some perspective to move into the next portion of our stream. Is this the longest bear season we've had? From top to bottom, it was 377 days. Back here in 2017, from top to bottom, it was 362. So it's about the same. Looking here in 2013-14, top to bottom was 418 days. This is actually pretty much dead smack dab in the middle. It is pretty much following the trend perfectly. This rally that we're going through right here is much akin to this rally that we went through right here. Now, this rally was a little bit higher. We were only 43% from all-time high. Right here, we were about 107% from all-time high. But we're also in a different market, and this bull market was hugely impacted by the amount of printing that went on. Without all of the printing that went on, Bitcoin probably would have topped out at 30 to 40. Instead, it went to 70 because of the huge economic variables that came into play. So where does Bitcoin go next? I think Bitcoin will have a little bit of a difficult time going all the way to 70K. It will. I'm very confident that it will. But I think what you're going to see happen is Bitcoin's going to inch its way towards 70K over the course of the next year or two. And what we're really going to want to be looking for is our 40s and 50s. Bitcoin's going to recapture these highs eventually. I'm very confident of that, especially with the devaluation of the dollar and the disinflationary nature of Bitcoin. But the thing that you have to keep in mind is the United States Central Bank balance sheet is moving down. USCBBS, United States Central Bank balance sheet is moving down. We're seeing the rolling off of treasuries and mortgage-backed securities from the Fed, and that means that money is being pulled from the economy. Literally is being pulled straight out of the economy. The economy is less liquid today by about $1 trillion than it was in 2022. History lesson on this to just give you context for that question, and then we'll talk about what to do with these facts that we've gone over today. The United States Central Bank balance sheet is the amount of assets that the Federal Reserve holds on its balance sheet. It's what it owns. The way that the Fed buys assets is it buys it with fake money. It literally creates money out of thin air, and it says, we are going to buy $100 billion or $95 billion of treasuries and mortgage-backed securities this month. And so we're going to purchase that with money that we created out of thin air. The law of conservation of matter does not exist, and the law of conservation of energy does not exist when it comes to fiat currencies. You can just, boom, we're going to buy $95 billion, and we're going to do it with fake money. So we're going to buy that much money in treasuries and mortgage-backed securities. That then puts money into who? The people that package the treasury, it puts money into the treasury and also puts money into the mortgage-backed securities. So some of that money goes straight into the federal budget, and some of that money goes straight into the people that package mortgages into mortgage-backed securities. Hint, hint, those are banks. So now those banks are flush with capital that they can go and lend out because they just got money for something where the money didn't exist before. So they made that sale. There's now new capital in the market. That new money expands the money supply. When the money supply is expanded, then there's more money to invest in this traditional market, but also more money to invest in risk-on assets. And so when the United States Central Bank balance sheet goes up, the balance sheet goes up, that money is injected into the economy. There's literally $9 trillion floating around in the economy that wasn't there before because that money was given as the payment for the assets that the Fed owns. Now, what happens is that the Fed rolls off those treasuries and mortgage-backed securities. They've been doing that for quite some time now. And the way they do that is that when the treasuries or when the mortgage-backed securities come to renew, and when they expire, they just don't renew them. So if it's a 3-year treasury, after 3 years, you have the option to either pull the money out of the treasury or you have the option to put the money back in the treasury. What the Fed does when they're trying to roll off treasuries and mortgage-backed securities is they essentially don't reinvest what's been expired. And so that money goes back to them and they delete it and they pull it back out of existence. So they're able to manipulate the amount of currency in the economy that way. This downtrend is healthy for the dollar because it means that there's less dollars going to be in circulation, which means that there's less currency side inflation. There's two major kinds of inflation. There's inflation based on the printing of money, and there's also inflation based on the growth of the economy. This means that there is less currency side inflation because some currency is being pulled out of circulation. Again, the Fed basically gives the treasury back to the treasury or the mortgage-backed security back to the bank, and then they take their money back and then they delete the money, if that makes sense. So they create the money out of thin air, use it for payment of T or S, the treasury mortgage-backed security. So now there's new money in the market and the money amount in the market goes up, the amount of money in the market goes up. Then when these expire, then they get their money back. The people that own the treasuries and the mortgage-backed securities get their money back and they delete the money again. So the amount of money in the market goes down. So when the United States Central Bank balance sheet, the amount of stuff that the Fed owns goes down, it's a net negative for the economy, but it's a net positive for the stability of the currency because it means that there's less money in the market to cause inflation, but it also means that there's less money in the market to invest in risk-on assets. So this is overall a good thing for the dollar, bad thing for Bitcoin. That's one of the reasons that we saw a huge rally on Bitcoin back here, and we're seeing suppressed prices now. Back during this era, you can see very clearly, Central Bank balance sheet, there we go. You can see during this period, we were seeing a huge amount of increase in the money supply being put into the economy based on the United States Central Bank balance sheet. Right around the time they topped it out and started moving down, obviously Bitcoin's been under a suppressed area since then, which means this this bull market was bigger than it probably would have been, and this rally is smaller than it probably would have been because of the actions of the Fed. The effective federal funds rate's been the same. The EFFR was 0 over here. It's had a heightened peak here. So again, if we were to go on to a regular scale, we probably would have seen Bitcoin only getting to 35 to 45 for its previous all-time high, and we'd probably be at like 30 or 40 right now, if not for the actions of the Fed. So just keep that in mind. We harvested in the summer over here. Right now, we're in the winter based on what the Fed is doing. But the Fed's going to turn around because their default is to be printing money and have low interest rates. That's their default. It's the exception to the rule, not the rule, that they have high interest rates and low inflation, low printing and low injection of currency. If you look at the history here, which again, this is not so much the best thing for the dollar, but or the country for that matter, but the general rule of thumb is that the Fed puts more money into the economy. The tightening, the quantitative tightening, this is called QT, this is called QE, quantitative easing, quantitative tightening. The quantitative tightening is the exception. The general rule is put more money into the economy because they're trying to expand the money supply because the economy is expanding and they need more money to liquidate that system. Lubricate that system. And the general rule of thumb is to have a very low interest rate. You can see the interest rates for the most part in the last 20 years have been relatively low, or they've been going down. So we're in the exception, not the rule right now. When we return to the rule, and that is that the Fed is printing money and that the effective federal funds rate is either going down or it's very low, that's when you start to see a major expansion on Bitcoin. And it just so happens that that seems to be lining up with the next 6 to 12 months. Probably the next year or two, to be realistic. So just keep that in mind when we look at this, that, oh, this is the longest bear market that we've had, and we're lower right now than we were back here. Well, just remember, these were inflated highs, and these are artificially suppressed lows. These should be much more like this as a high, and this is where we should be right now. That's really, if the Fed had not been changing the US dollar, this is probably what we'd be looking at right now. Instead of being 100% from all-time high, we'd probably be more like 30 to 50% from all-time high. Just something to keep in mind. So as far as what do we do in the short term with this information? Short term, do not enter a trade inside of this triangle. That's the first thing. Do not enter a swing trade inside this triangle. If you're down here on the minute chart and you're scalping, whatever. That is kind of irrelevant up there. But if you're trying to enter a swing trade, you need to wait for one of these levels to break. I'm going to give you more information as we go about this, but there is absolutely a short trade here, a long trade here. I would be very cautious, though, about entering a long trade before we break above our local high, and I'd be very cautious about entering a short trade for a swing before we broke below this low. If we break below this support level, there's a ton of support down here. It's not a great place to enter a short. If you're trying to enter a short, remember what I said earlier. You got to look at these trades as business decisions that are critical to the long-term financial prosperity of you and your family. You want to make the right decision. So if you're going to enter a short, I'd probably wait until we made a fresh low and then short all the way down to 22,808. This is a great place to short if we get down here. If we break above this uptrend, that's a great place to go into a long trade. And so I think if you're going to do trading, it's not a bad idea to actually work on day trading because there's absolutely volatility down here that you can trade, especially if you look at the other markets. But for right now, I personally would be careful about entering a trade with any of the information I've given you unless we break above 27,500 or break below 25,000. There are definitely trades if we do one of those things. If we're trying to break from here up to here, this area right here is a great trade zone. And if we try to break from these regions right here, these are great trade zones. Again, this area right here, this area right here. We're not at one of those zones yet, so I would personally hold off on any kind of swing trade if you're trying to make one on that time scale. And if you're looking for a trade, make something down on probably the hour to the 4 hourly chart, maybe even the shorter time frames than that. There's more volatility down there. On the longer term, keep in mind what I said about the Fed. That's the reason I've been talking about the Fed so much. They are one of the major drivers of the United States stock market as well as the Bitcoin market right now. And it's not always going to be as suppressed as it is at this very moment. We're going to see Bitcoin go into a major rally, especially when the Fed gets off our case. All right. Really appreciate all of you guys for tuning in. If you did enjoy today's stream, make sure to do a couple of things. Hit that like button, subscribe to the channel if you have not already, and also make sure to sign up for Lux Algo because we are watching Lux Algo like a hawk, but I don't show it to you every single day on all of the different time frames. I don't show it to you on all of the different charts. It is an incredible technical indicator, and you're definitely going to want to use it in your trading and your investing, even if you're just a hobbyist and you want to try and predict which way the market goes because you're interested in this stuff and you think you might trade or invest in the future. It's going to be worth your money. I've been using Lux Algo for over 3 years, and they are quickly becoming the largest community of technical analysts on the planet, stock market, crypto, anywhere. And I am very, very excited to be partnered with them and to be personal friends with the founder and the chief executive officer of Lux Algo. He's a good guy. I've always had a lot of respect for him. Behind the camera, he's a great guy, cool guy. Got to meet him in person one day, got to spend the day with him, took him to the top of Ben Hill Griffin. He's like, oh my gosh, can we go down? It's like, this is kind of high up here. But yeah, anyway, appreciate all of you for tuning in. JoJo's in chat, Silence in chat. Good to see you guys. All right. Good deal. Like I said, we're going to go ahead and wrap it out. Before we go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Yeah, I got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. Yeah, I got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Yeah, I got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. I got a real good feeling.
Whoa, I got a real good feeling.